Hi everyone, hope you're all doing well. Welcome to this March update for the Etoro portfolio. So in case you are new around here, at the start of the year, I did start off a Etoro portfolio, a copy investor portfolio, and I can actually say we have got improved as an official popular investor on Etoro platform yesterday. So that's great news there. But yeah, I did create a Etoro popular investor account. A couple of reasons why. First of all, just transparency. I thought it was really good that I could actually show you guys what I'm buying and selling through an official platform that actually shows the year-to-date return. So that's good for transparency. Second one, obviously good for the videos, get to talk about certain stocks here and how I'm building up a brand new portfolio. And the third one is I am, I've been in the stock market for a few years now, I think 7 or 8 years now, and I've done quite well. There's only 1 year I've not outperformed the market, which was 2022, where, the worst stock market since 2008. So there's a lot of people that didn't do well during that time frame. But apart from that, I've outperformed the stock market every year. And so far, including this year, I'm outperforming the stock market this year as well. So I thought, okay, can I try and help other people now and also create a little bit like a hedge fund? And with eToro, obviously, people are able to invest in me through the popular investor program. So hopefully that is another platform that I can use to help people as well. So yeah, we have started the eToro platform. I will also do my personal account updates as well, still on the Patreon and every three months on the YouTube as well. Obviously because they've been going a lot longer as well, so it's good to update them. But with the eToro one, yeah, we started the new portfolio, which was tricky because starting a new portfolio is never easy. It's certainly not easy when you start at the top of the stock market, which was always my concern. I always said to you guys to be starting a stock market portfolio now at the start of 2025 is tricky considering how highly valued we are. It's so much easier starting a stock portfolio when it's a bear market, when all the stocks are down, because right now I've just got to be so careful averaging into positions because I'm looking at a few of these stocks and thinking if the stock market goes down 10-20%, I'm going to get these a lot cheaper going forward. And after starting the stock market portfolio in 2025 on eToro, I don't really count 2024 because it was literally like 2 days it was open in 2024. But in 2025, yeah, we're up. We're actually up 2% at the moment. If I filmed this video yesterday, I would have been up something like 5% as well. So we took a little bit of a whack yesterday because Hims and Hers had a bit of a rough day. So yeah, probably should have recorded this video yesterday, but we're still up 2%, which is okay. Now, obviously, as well, when you put into context, the S&P is actually negative this year. The S&P is actually down 4% this year. Yeah, we're outperforming the S&P 500, which is obviously the target. There's no point in me doing this if I don't beat the S&P 500. And right now, I am beating the S&P 500, so that ticks all the boxes. A little bit, like I said, a little bit frustrated. I didn't actually record it yesterday, but hey, it is what it is. And the other thing is that with the eToro portfolio, it's actually the performance is probably even better than what is shown, is because I'm trying to copy my personal accounts now, and it's going to take me a few years to kind of get to the level where this portfolio is quite close to my my real portfolio. But the more impressive thing is that 2 of my best performers this year are not even on eToro. So I wanted to go buy CVS Group, which is currently not offered on eToro platform, and we bought that in December and we're completely sold out of it now for a quick 20% gain. But that 20% gain would obviously have put the year return up. And the other one is Audioboom. So my best performing UK stock this year, I actually don't, it's fair though, it's actually having a little bit of a pullback at the moment, but even so, I'm still up on this position a good amount. And yeah, if this stock would have been on eToro, my gains would have been even a bit better than currently what is shown on eToro as well. So yeah, all things considered, with 2 of my good performing stocks not even in here, and with the drawback that I had yesterday, I'm still quite happy with the gains. And obviously, like I said, the whole point is to be beating the S&P 500 here, and that is currently going on. And the thing is, I look at the portfolio as well, and I do think it will continue to outperform the S&P 500 in the next few years as the time goes on, which is the great thing. One thing that's worth pointing out, and I'm going to have to message eToro about this, is currently it says my portfolio offers a 0.39, let's just call it 0.4% dividend yield. But as you can see here, it's only picking up 3 of my stocks, which is Google, Meta, and Evolution, which just isn't true, because If we actually do have a look at my portfolio, there's even better dividend performers or payers out than that. So for example, B&M is around about a 7% dividend yield. If you add special dividends on, that's like 11%. Yeah, you got the likes of JD Sports, which is a smaller one at like 0.5%. Card Factory is like a 7% dividend yield as well. Their War Paint's around about a 3% dividend yield. And then you've got Money Supermarket, which is another 7% dividend yield. So those are massive dividend yields that are currently not on there at the moment, which is obviously really important, because that dividend yield realistically right now is probably something towards 4%, I would expect. So yeah, I need to see about Etoro and get that updated, because I think that's one of the key points. You know, my portfolio is built on growth stocks, value stocks, and dividend stocks. I call myself a triple threat investor. You know, I like to invest in all three of those stocks. I don't just go for dividends, growth, value. I like a mixture of them. That for me is a complete portfolio, and that's what I've got in here in the portfolio right now. Is you know, I'm building up a portfolio that offers growth. There's the growth stocks there, the value stocks, the dividend stocks there, and hopefully it's the perfect portfolio, and we'll see what happens. Looking at the portfolio right now, Google, we're down 11% on. I'm fine with that. I will be aggressively buying Google. I've already made it my largest position in the portfolio, and I will continue to be buying Google. Fantastic company. Hims and Hers rolling up 13% now at the moment, and that's had a major pullback, but I think that's going to be a major good performer in the next few years. That's why it's the second largest position. AMD, we're down 7% on. This is just incredibly, cheap at the moment, in my opinion. 21 forward times earnings. The last 3 quarters have gone from 18% revenue growth to like 22% revenue growth to 26% revenue growth. And I think even in the latest quarter, they're expected to go to 30% revenue growth. That's, it's just accelerating. And we've got a player in the AI space there as well. B&M, bit of a tough time for B&M at the moment, but like I said, collect that lovely dividend, and then hopefully, that's going to have some metric expansion, and that expansion into France should do really well for them. Evolution, we're actually up on. Got a nice average on this one at the moment, and a lovely dividend, and obviously a player in the growth of the iGaming space going forward. Exactly the same with Gaming Realms. Kind of copycat of each other there. JD Sports, we're down about 5% on. I think JD Sports is just way too cheap at the moment. I would argue the case that B&M should maybe be a little bit lower, and Evolution, Gaming Realms, JD, Mercado Libre, and Card Factory should all go above them. So that's just some rebalancing that I'm going to have to do going forward. Mercado Libre up 15% on. I would love to buy more Mercado Libre. I want it to dip another 5-10%, and then I'll start buying that. Ideally, Mercado Libre comes the third largest position in this portfolio, but it depends on if I can get the right value for that. Card Factory, yep. Absolute amazing company. That should be a lot higher than where it is now, than 5 forward times earnings. We get a lovely dividend from that one as well. DraftKings, we're down about 6% on. I'll slowly add into DraftKings. That could, because of just how it is as a stock, the volatility could put that to a little bit of a drop, and I'll try pick it up when it does have a bit more of a drop. Meta, I love Meta. In my personal portfolio, I'm up 200%, 300% on my positions. And I would love to buy more Meta. So I built a little bit of a start position, and then I'm just hoping that Meta has a bit of a drop, and I can try catch that on a bit of a drop. And if it was the right value, obviously Meta would come a very large position in the portfolio. But when I mean the right value, I'm talking like 17, 18 times forward earnings. So I'll just play the waiting game with that one. Celsius, we're up about 17% on at the moment. Obviously, that went a bit too low, and now it's having a bounce, and obviously good acquisition going on there. New Holdings, we're up 7% on that one. Enphase, we're down 9% on. I probably will add into Enphase at some point as well. Warpaint, we're down 26% on. I am struggling to get orders through on Etoro for that one. That is the big issue with liquidity. If I can get an order through, I'm going to be buying that one, but it's just the orders. And then Money Supermarket, we're up 9% on that one, and obviously we get a nice dividend from that one as well. So yeah, overall, I really like this portfolio. Like all the positions, I absolutely love. There's a little bit of rebalancing on positions where I want them to be, but overall, it's not a million miles away. The structure is kind of where I want it to be at the moment. So really happy with that. Obviously, beating the S&P 500, which is good. New stocks I could buy. A lot of them I could buy at the moment, to be fair. So I will buy if the market continues to fall, and if the market goes up, I'm sure we'll get the rewards. New stocks in, potentially there's a couple of stocks that could go in. I'd love Microsoft in there. It just has to go to the right value. Even though, yes, it's on a drop at the moment by 14%. Just because it's dropped 14% doesn't mean it's good value. I want to get Microsoft not just because it's dropped. I want to get Microsoft because it's dropped and it's gone to good value. And right now, it's not exactly there for me at the moment. But if Microsoft was to drop another 10%, which could easily happen if the S&P goes down another 3-4%, I will consider adding Microsoft in. That'd be a great company to have in. Amazon, that's having a bit of a drop at the moment, and that's down about 20%. Same again. Yeah, it's great. It's on a drop, but I don't want to be buying something just because it's dropped. It's got to be dropping and gone to good values. And right now, yeah, it's gone to okay valuations. I think you'd make I think you'd make money from Amazon here. But I want to make a lot of money here. And for that to happen, it needs to maybe go just a little bit lower than where it is right now. But nothing too crazy. It's not a million miles away. Trade Desk is one I'm watching. They reported earnings and the stock massively did not like it. That's down 56% on it. Still think it's a fantastic company. If we still look at the recent financials, net income was up to 87%, revenue was up 22%. The only thing, once again, is it needs to go to a good valuation. That good valuation is probably $45. So I'm watching that one as well. So we'll keep an eye on that. D-Local is one I'd like to add in. The only issue, I actually think this is good value. The only issue that I have with this one is that obviously we've got new holdings and Mercado Libre already in here. Having a third Latin America stock might be just too much exposure into the Latin America space for this one. So I don't know if I can add it for that reason. If as a business point of view, I'd add it in today, but that's the only thing that's stopping me at the moment. Audioboom, I really want to add Audioboom into the portfolio. The only reason why I can't is because it's not on eToro. Yeah, I keep requesting eToro to add it to the platform, and we'll see if we do get there. And if they do get there, yeah, I'll add it in. And yeah, that's it all overall. So yeah, overall, I'm happy with the performance overall. Shame I didn't record it yesterday, but considering as well we've had not two of our best winners so far this year, not even on eToro, and we're still up 2% and beating what is so far a negative year for the market, and the market's down 6%. Yeah, it's okay. It's okay. Like I said, it was a bit better yesterday when we were beating the S&P 500 by around about 10%. That was absolutely amazing. But I'm sure that as the market continues over the long term, I would expect all of these stocks to, outperform the market even more in the long term, and will do really well going forward. So, yeah, that's the update for so far, guys. Thanks for watching, and I'll update you all in April in about a month's time. See you in a bit.